eToro just dropped its latest leaderboard, and there is a guy on there pulling 312% a year, copying nothing but EOR USD scalps. His equity curve is so smooth it looks like someone drew it with a ruler, and right next to his face is a little blue button that says, Copy. You click it, and now you are him. Congrats, bro. You are now an elite hedge fund manager from your couch. Now, here is what nobody is telling you. That guy on the leaderboard is not a trader. He is a survivor. The platform is showing you the 12 guys still standing out of 10,000 that tried the same dumb strategy this year. The other 9,988, they got vaporized. Their accounts got quietly deleted, scrubbed off the Discover page, and now they are driving Uber. And you, my guy, are looking at the survivors and going, wow, retail can do this. It is the same as walking into a casino, interviewing only the guy cashing chips at the cage, and concluding that roulette is a great career. Bro, the math hasn't changed. ESMA forces every one of these platforms to print the loss rate on their own homepage. eToro, 77% of retail accounts lose money, plus 500, 79%. CMC, 76%. These are not my numbers. These are their numbers, mandated by the regulator. Printed at the bottom of the page in tiny gray font, right next to the giant green button that says, Copy this elite trader. Now let me show you how the smooth curve actually gets made. It is called Martingale. You take a losing trade, you double the position size, and you wait for it to come back. If it does, you win small, and your equity curve ticks up a tiny green pixel. If it doesn't, you double again, and again, and again. For 40 months in a row, this looks like genius. A beautiful staircase going up and to the right. Month 41, EUR USD trends for 3 days straight because some central bank guy sneezed and the entire account goes to zero in a single afternoon. Apostegia and Oexler published this in Management Science, dude. Peer-reviewed. They literally proved that ranking traders on a leaderboard makes them take more risk, because that is the only way to climb the leaderboard fast enough to get followers. The system rewards the gambler. The gambler attracts you. You fund the gambler. The gambler blows up. Rinse, repeat. Okay, but let's say you found the one guy who actually has skill, the unicorn, the real one. You are still going to lose. And here is why. When the guru clicks buy at 1.0850, the platform has to copy that trade across thousands of follower accounts. That takes time. Research puts the lag at roughly 1.4 to 2.7 seconds. In a fast market, that is an eternity. By the time your order fills, the price is already at 1.0853, but it gets worse. These platforms are B-book brokers. That means when you trade, they are the house. They are not sending your order to a real market. They are taking the other side of it, and they widen the spread to make sure they win. So the guru, sitting on his special pro account, enters at the interbank price. You enter 3 pips worse every single trade. He catches a 5-pip move and wins. You catch the same 5-pip move minus 3 pips of spread, minus slippage, minus overnight financing, and you are net negative on the exact same trade. Same direction, same timing. He wins, you lose. The math hasn't changed. Now here is the part that should actually make you angry. You know how the gurus get paid? On eToro, the elite tier gets between 1.5% and 2.5% of assets under copy per year, paid by the platform, not based on whether you made money, based on how much of your money is sitting in his strategy. There is no clawback. If he blows up your account next Tuesday, he keeps the fee. Zulu Trade is even more raw. They pay the leader based on trading volume. The more trades he opens and closes, the more he earns. So what does he do? He churns. He opens trades for the sake of opening trades, because every spin of the wheel generates spread for the broker and commission for him. And you are not the customer. You are the inventory. Strictly speaking, this is not a brokerage. It is an affiliate marketing scheme with a chart on top. The guru is the ad. The platform is the casino. You are the chip. The FCA knows this. ESMA knows this. They have been screaming about gamification, leaderboards, confetti animations, push notifications nudging you into trades, all of it. UK investment complaints jumped 10% in the first half of 2025. £283 million in redress. Real people, real money, real losses. And here's the thing nobody wants to say out loud, between you and me. If anyone actually had a strategy that printed 300% a year, why on earth would they broadcast it to 10,000 followers for a 2% fee? A real edge is the most guarded asset in finance. The moment you broadcast it, the order flow becomes predictable. The institutional desks trade against it, and the edge dies. You cannot copy your way to alpha. The leaderboard is not a list of geniuses. It is a list of statistical survivors who are paid to risk your money so the platform can collect the spread. Close the app. Thanks for watching.